Well, hello there. Welcome back to another market closing live stream. In case you're wondering why my hair is crazy, it's because I went for a crazy ride in a go-kart. An amazing go-kart. A go-kart that I highly love and that you can check out by going to metkevin.com/cart. You can check that out with a K or a C. It doesn't matter. metkevin.com/cart. In the meantime, we have some things to talk about. Not karting. We're going to talk about the stock market and why it is going crazy. But the question, like we had this morning, is will it last? And is it time to start paying down some margin? I think the answer to that is yes. The stock doc says, thanks to this here prescription pad, it says, pay off margin. You better pay off margin. This is why we have a prescription for getting out of margin. Okay, moving on. So, Dow Jones. Falling, mostly on a roller coaster during the day, but down 0.13%. You got the S&P 500 barely left over in the green, 0.05. NASDAQ up 0.4. So tech again outperforming. But then again, today, really, it's the Russell 2000 that's outperforming. Russell 2000 up 2.44. This one's been lagging a little bit behind the curve. Now coming back a bit. Volatility up about 2% today. Not that big of a deal. We do have some red, though. We've got DWAC down 9.96%. Voyager Digital down 8.22%. Big digital assets down 7.48%. You've got Zillow down 6.23% as it wants to sell a batch of homes. Still trying to get details out of this, but yeah, it's not a good sign for Zillow. Not good at all. It'd be very stupid to sell a batch of homes as Zillow. But we'll see what else we can research here on Zillow in a moment. Etsy and Affirm over here getting beat up a little bit after those Amazon numbers. It's still sort of the same news here because there's no real individual news on on Etsy. And just potential disappointing forecasts on retail sales. It's just surprising because there is so much enthusiasm for spending right now, and spending is certainly up. All right, so then we've got holy moly, Google down 2.78%. That's a lot. That's a big weight on the indices. That's a big old oof. All right, no prey. We've got LJ Zulu. Oh, it's not working. LJ Zulu Victor today. No prey. Okay, so we'll get that terminal going. There we go. Okay, so then we've got Dogecoin down about 3%. I was shocked on Google dropping that much. Adobe's down 1.8. We've got Funwares up there down with DWAC. Let's see. Yeah, Amazon 1.72. Cloudflare down 1%. Lucid was up crazy in the pre-market, like 8% in the pre-market. Thing just tanked like 9% today. It's only down 0.77 right now, but still, I mean, compared to the pre-market, it was insane. Let's look at the runners today. On the runner side, we got Vuzi up 26%. A lot of enthusiasm for those holographic wear goggles. I'm not a big fan of the Vuzi goggles. I purchased them. I tried them. Their customer service is lacking. The product is marginal at best. And look, my heart goes out to the people who work for Vuzi. I don't think it's their fault. It's new technology. It's in development, So anyway, SoFi Tech is SoFi up 12.59%. Really good run here on SoFi. Matterport up 9.25. Amazing. Big print attendees here. Holy crap. Tesla's up 7.3%. I didn't know it went that high. Oh my gosh. Last I checked, it was like 4. Holy smokes. Look at that Tesla run. This is in freaking sanity. That's crazy. That is some cookie for Cocoa Puff stuff right here. Wow. But anyway, okay, so yeah, Tesla's down. Tesla's up 7% here. This is, I don't even understand. The volatility on this has got to be through the roof right now. I will check. Hold on. Let's look specifically at Tesla volatility. Tesla. Search. All right, what do we got? Tesla individual company news. No, we don't need company news. We need Tesla historic volatility graph, please. Okay, here we go. Oh my lord. Yeah, we are twice the 100-day average of volatility. We're 50% higher than the 30-day of volatility. I mean, it's volatility is staying insanely high right now. I'm curious. I usually don't do this, but I would be very curious to see what sell puts are like, because I bet you there are a bunch of people betting against Tesla right now. 41 bucks. 41 bucks for a 4-day. 41 divided by 1200. That's 3.4%. That's pretty juicy. 3.4% basically for a 4-day put. Wow. We have skew. Let me see. Let's go 1250 and 455. Okay, so 67. Let me go over here. There we go. Stop it. Weeble, you're messing me up. Oh, Weeble, you're screwing with me. I don't like it. Oh, Weeble. Whatever. Weeble tends to be a little disappointing. Come on, Weeble. Load me some puts. Just want to load anything. That's just, whatever. We'll try again. But I'm only going to try one more time. All right, here we go. All right. Curious. So if I go over here, 1150 sell puts for next week. You're getting 39 bucks. You're still getting that. What are you getting? You're getting 1150 divided by 39.15. Oh, sorry, the other way around. 39.15 divided by 1150. 3.4% plus the insulation of really, you're getting a blanket of like 45. That's nice. Selling puts right now is juicy. Especially if you wanted to increase your position in Tesla and you think there's a catalyst for it to potentially correct down, these are not horrible right now. See, like if I were going to sign up to 10 of these, the problem is the collateral requirements are massive, right? I mean, this is going to take $1 million, $1.1 million of collateral to make this happen. If I go to 1,200 for next week, I get 61 grand. I mean, that's like buying them for 1140, these shares, which makes sense. And if I go to 1150, that's like getting them for 1110. Say you go down to 1100 for giggles, and then out to December, 60, still a $60 discount. That gets me the shares for 1040. And that's a $60,000 credit for December. Which is only 6 weeks away, folks. That's crazy. This is not horrible. I don't necessarily want to tie up the collateral, but it's not horrible. I'm going to put thought into that. Lemonade, finally moving a little bit. InsurTech, finally running a little bit before earnings. InsurTech has been in the toiletta. It has been not good. All InsurTech has just been getting smoked. Root, Lemonade, Hippo. It's just the industry, which is fine because things go in cycles. They have no InsurTech today though reporting. We have Simon Property Group, Chegg, Clorox that reports today. Nothing super duper exciting. That's after the close. Okay. Let's see here. By the way, we're going to have a special guest come on right after the market closes. So that'll be fun. Which reminds me, I need to send them the link. That's all right. We'll get that done. All right, so this is insane. This Tesla rally into the close here, just absolutely insane. Matterport 10%, crazy. Like I said, the market's just going mad. But Zillow getting smoked, 6.5%. I wonder where Redfin is. Redfin's actually up slightly. That is interesting. Redfin's up basically on the news that Zillow's suffering, which kind of makes sense. Like if you wanted to diversify some of your tech holdings a little bit, and you wanted to get exposed to real estate without being in like REITs, you'll probably, but then again, when does Zillow become a buy the dip opportunity, right? I don't know. When does Zillow become a wedge deal? Because, they're being stupid. I don't know. All right. So, what else do we have here? Well, Matterport just broke 10%, rallying a little bit into the close. SoFi over 12. Very good. Tesla 722. I can't believe it, but okay. And DraftKings up 5% today. That's cool. And then we have, there's Redfin. That's crazy. But Dave & Buster's 38.74. AMC's up 4.24. Smile Direct is still sitting at $5 in the toilet down there. Ubiquity 316. Coinbase up. Neo's still up about 3%. Despite that somewhat bad news, Enphase, wow, almost a full 3% today. Jeez, this market just scary. It's too green, folks. It's too green. We expected an end of the year rally, but it's going green pretty fast. All right, let's see what we got in the news, and let's look at some coins really quick too. Axie Infinity 135, Decentraland 306, Dogecoin 27, Sheep 70.99, Cardano 195, Ethereum 43.40, and BTC 60.9. I've covered calls against both Enphase and Tesla right now, some shares, and I would consider potentially selling a little bit off of those. Yeah, absolutely. In fact, I've already done some selling. I set an alert to everybody in the Stocks and Psychology of Money group already on some of the things that I've rotated on. I don't know. I might make a video on that later unless I fall asleep. It depends. So, all right. What is this? Somebody sent me this. How to trade crypto as it hits all-time highs. I don't know. I didn't watch that. Pancakes. Oh, this was back when we were doing the Squid Gamers stuff. That's right. Okay. So let's get to where we want to be, which is the news. Okay, Manchin slams brakes on Biden's economic plan. Man, it's just Biden cannot catch a break with that plan. And now I know there are a lot of supporters in here of the Let's Go Brandon movement, but let's take a look here. Senator Joe Manchin said Congress needs more time to assess the impact of Joe Biden's $1.75 trillion tax and spend package. The Democrat refused to say whether he supports an outline Biden presented last week or whether there had been any progress in negotiations over the weekend. His remarks are a blow to Biden, who presented to House Democrats what he says was a compromise plan. Manchin also criticized progressive Democrats for holding up a bipartisan infrastructure bill until there's a full agreement on the larger economic package. Yeah, so remember, folks, there are two infrastructure packages. One is hard infrastructure, like roads, railroads, ports, transportation, like actual infrastructure, right? And then that's already been passed by the Senate. The House could literally just sign it and be done with it. They have the votes, but they're not, because progressives are like, well, we don't want to sign your funding for highways and hard infrastructure unless you sign our social spending package. That's their argument, right? The social spending package includes things like the extension of the child tax credit, which is the $300 per month for every child under 6, $250 per month for every child under 18. They'll be extending that for a year, along with other things like paid leave but so far it looks like a free community college has been nixed, but there would be some form of free preschool for children. Yeah, it looks like here's another update. Mansion, it says, I won't, well, it's not loading now. Now it's pinned. Here we go. I won't support a bill unless it's paid for, limits inflation, and boosts the economy and helps Americans. And so obviously the expectation there is that this potential social spending could lead to some more inflation. That's been a fear of Joe Manchin's for a while. Okay. All right. No, I'm not going to be able to solve world hunger yet. All right, let's see here. Yeah, it's not really that easy. It's not that easy to say our military budget is $7.8 trillion. How about we cut some of that to fund infrastructure? It's just, because what you're talking about is cut the military to fund social programs, right? But when you cut military, to some degree, that also means some people are losing their jobs, which means now the money you're cutting there, you might have to support those folks with other social programs because now they have no jobs. So there's a balance to everything. Sure, the expense for a military might look large, but I think there are definitely things that can be cut in the military. I think there's a lot of wasteful spending and inefficiency, but I don't think it's that easy. And it's certainly not that easy for Congress to get on, right? Like, we could debate all day long about where we can cut from the military. Don't get me wrong. But what you got to think of is, like, are you going to get Republicans on board with that? Probably not. We're the largest military force in the world by like 3x or more with our technological abilities. So, yeah, that's a tough one. And that's a tough sell with Republicans. So you got to keep that in mind. It's how are you going to politically sell something like that? Cut the Fed, bring on the fiscal stims. Oh, you mean like at the same time as taper? start sending the checks. Manchin said Monday he wants a complete analysis of the Biden plan. Yeah, I mean there always will be. I mean there'll be a congressional research report on this. The CBO will always score bills like this. So we'll see. All right. So let's see here. All right. Manufacturing growth in the U.S. eases. We saw that this morning. Somebody writes here, recently doubled my account. Pay off $20K of 5.3% debt. Home in January. Down payment secured. Better pay off debt and reinvest. Debt to income max with mortgage. I mean, me personally, yeah. I mean, it depends what kind of debt that is. If it's margin debt, absolutely pay it off. So it depends what kind of debt it is. Mortgage debt might be different. If it's like a credit line or something. I don't know. What's this? The Trump SPAC had a head start? Tell me more. The way a special purpose acquisition company works is that sponsors raise a bunch of money and then go out and look for a private company to take public. In theory, anyone could do this. I could launch a SPAC and try to raise money from the readers of this column. Maybe it would work. Then I'd have some money in the bank, and then I'd go out and look for a company to acquire. How would I do that? I don't know. I don't personally know anyone who runs a big private company they'd like to turn public. I suppose I could call up some investment bankers and say, hey, do you know any companies that would like to merge with a SPAC? But I gather that hundreds of SPACs are calling those bankers every day. Okay. It wants me to sign in. Okay. I mean, so far, this just seems like an opinion article here. I don't know that we need to go through the opinions of potential Trump backers here for the Trump SPAC. Let's instead go ahead and look back at some of the sticks here to see what's going on. Is Tesla still moving? Where's Tesla? Yeah, Tesla's still hanging out at 726. I am tempted by some of those sell puts, but then again, I also don't like selling puts when the market has moved so high. But then again, you could take advantage of certainly some increased volatility here, but you're tying up a potential liquidity. So if the market falls, now you're potentially going into margin to buy the dip, but that dip, could end up being worse. Who knows? Anyway, 6% on Lemonade. Lemonade's finally doing a nice little move here. Good. Invitae, BlackBerry, Meta. It's running before earnings is what it is. Owlet's up 4.4%. CRISPR's actually up 4%. Wow, there's a little bit of a shocker. Shift Technologies. Hey, I just submitted my car to Shift to see what they'd pay me for it. So you'll have to let me know. How are my metaverse investments going? Oh, amazing. My biggest one is Matterport. And look, it's up again 9%. I mean, this thing, I did a big like $1.6 million purchase at like 19. What was it? So it was like 1905 or something. So current number divided by 1905. And this was like a week and a half ago. Yeah, it's up like 30% on 1.6 mil. It was like, yes, thank you. That was great. But yeah, I really love the metaverse Matterport potential. Are you going to get your Lucid Air order? I have no idea. They're stringing me along, and it's very annoying. And they won't even invite me for a test drive, even though all these other car YouTubers have gotten test drives. It's like, really? It just feels shady. Feels like I'm getting shafted. That's it. Oh, so anyway, looking forward to that Shift review. Yeah, I'm curious because I also submitted one to Carvana and Vroom, so we'll see. We'll shop it out. We'll see how it goes. All right. If I sell my Tesla, I'd be able to buy one more Tesla stock a month. Yeah. Because they do car reviews for a living. So I do stock reviews for a living. What's the difference? They're running ads to promote their cars and the stock. What's the difference? You got a whole different audience over here. Unemployment. Okay, let's see. I never did an interview with the CEO, no. You were too detailed about your reviews. They need other novices to find the obvious stuff before giving. I appreciate that. That's really nice. I'm by no means a car expert, but I do appreciate that. Okay, Alphabet. Wow, Google now down 3%. Look at Google. Look at this, folks. This is profit taking. This is a little bit of an inflection here, I think, in the market, because this is people cashing out of plays like Google. In my opinion, that's a little bit of A, profit taking, and B, hedging. This is institutional hedging we're seeing right now. My bet. I believe that. Okay. I want to see the SPY too. Matterport holding on to 10%. Oh, 1,200 Tesla. Oh, it hit 1,200. Oh my gosh, look at that. It just went to 1,202. Look at that volume surge. People are taking their money out of Google and throwing it into Tesla. Wow, it's insane. Well, we've got a very special guest coming on regarding Tesla. So it's an institutional investor in Tesla. So it'll be really cool. Let's see here. Fuzi. Okay. Wow. What a nutso day. It's hard to comprehend sometimes. Anyway, Roblox down 3.2%. Amazon. The Google. I want to see what's the volatility like on Google. Did we get a pop on Google's vol? Not necessarily that I want to sell some puts, but I want to look how much volatility potentially spiked. Oh yeah. Ooh, we got a nice little juicy volatility bump there. Woo! We have not seen that kind of volatility in Google in a while. Hold on a sec. Let me go back to January. That was literally when we last saw that kind of volatility. Yup. Nailed it. So last time we had this kind of volatility at Google was at the beginning of January and the beginning of March. So we've been at these elevated levels before, but that is it. I find this very interesting. Look at this. The volume keeps going up, and it's sell volume. That is substantial sell volume. Tesla. And then it looked like potentially a large institution buy came in over here. And that's really what pushed us to 1203. Sitting at 12, essentially 01 right now. Wow. What's going on with Apple? Well, where were you last week when we covered Apple earnings? That would give you the answer. Look at that. GameStop up 9.15% as well. I bet you GameStop's moving on Metaverse. Because they got the whole NFT and W3 developer position and all that good stuff. Microvision, Matterport, Fisker, 9%, Plug Power. Woo! Very cool. Macy's. Wow, Macy's up 7.4%. My goodness. So Macy's is up 7.4%, but Etsy and Amazon and Affirm are down? I mean, I guess. Brick and mortar. There's got to be news on Macy's. There's no way. Let me see. Macy's. I think Tesla has the potential of splitting around 1,500. Yeah, I don't particularly see a reason for Macy's. Huh. Yeah, how's Elsid doing? Lucid's down about 1.36. Robinhood's 34. Robinhood's just dirty right now. They got downgraded by JP Morgan. Gosh, they bagged on them hard. JP Morgan wrote them up at $26. Dirty. Let's see here what the volatility is like on Robinhood. Volatility on Robinhood. Nothing special. Oh, it's kind of moving a little bit here. How about volatility on Pinterest, I hear? Okay, let's see what we have. Yeah, Pins is still up. It's slowly rotating down, though. Very slowly rotating down. You got some buy pressure coming into Robinhood here. Wouldn't surprise me if you had funds like Cathie Woods buying Robinhood today and selling Tesla. Whoa! 1207. OMG. And InsurTech is up. Root is up. Lemonade is up. And that must mean Hippo's probably up somewhere. Student debt. I'd probably pay off student debt, yeah. Snap going wild into the close. Well, okay. Yeah, a lot of volume. This is it's probably honestly a lot of this could be Cathie. A lot of this could be Cathie Wood. You know, sell Tesla, buy Snap, buy whatever the other thing was we just looked at. Wow, this is insane. I don't get it. Let me see. Ugh. Take a look here. Tesla. Wow, the call options are just, oh my gosh. They're really green. Well, duh. I mean, I'm not going to close anything, right? I really should. Oh, well. Too late now. 1 minute to the close and be rushing. Screw it. Robinhood's not letting me in anyway. Whatever. Kevin, did you sell Tesla when it fell down this year? No, I increased my exposure to Tesla. And you got so much criticism because you were holding such an overvalued car company. Oh, yeah. People always make fun of me for my Tesla projections, but they're morons. So I don't really care. I don't have to listen to people's dumb opinions. So, okay. All right. So we're going into the close with backed holdings down 15%. Affirm's down 6 and a bit. Zillow's down 6 1/4. Tesla broke all-time highs, broke 1,200. It's at 1208 going into the close. Let's listen to the closing bell. This is a crazy closing, and we'll have a special guest coming up soon.
Tomorrow, the dollar is down a 0.25%, having had a decent run last week. At the close, up 0.2% on the S&P, a third of 1% on the Dow, and 0.64% on the Nasdaq.
And there you have it. We are up 0.26% on the Dow, 0.18% on the S&P 500, Nasdaq up 0.63, and Russell 2000's up 0.265. We do have earnings coming up. We have earnings coming up on Chegg, coming up at 4:05. Chegg earnings coming up. Then after that, we have Clorox coming up. Then we have Simon Property Group coming up. And us, yeah, we got the Simon Property Group. Okay. It's a good split. We'll be able to see what's up with those. Yeah. Okay, good. So Simon, Clorox, Chegg. Let's see what's up here. Chegg is the textbook rental website. They are implying a 8.7% move after earnings. Clorox have been having a little bit of a rough run, mostly because people think that potentially individuals might be stocked up enough on Clorox-style products now. Simon Property Group hits a 52-week high at 147.80 right before earnings. All right, let's see here. Let's hop on over. And waiting for those earnings to come through. In the meantime, make sure you get up to $70 in totally free stock with the stock trading app Public. Go to metkevin.com/public and get up to $70 totally for free. They don't buy or sell your information, and they don't use payment for order flow. Check it out by going to metkevin.com/public and follow me there at MeetKevin. Okay, so let's see if we continue a trend here on a firm or if we end up holding 150. Let's take a look at the 1 hour chart here for a firm. We have a pretty solid trend right here. Yeah, look at this trend right here. That's pretty solid. Right there. There we go. Pretty solid trend right here. We'll see if this ends up giving us any kind of indication of more of a downside coming. But I think it's really too early to tell. Yeah, a little messy here. So we'll leave that trend line here. Keep an eye on a firm. Tesla has just obviously gone bonkers. Take a look at it again here. Yeah, Tesla up 8.53%. That's insane. And folks, it's rising after hours. It's going up in the after hours. That is kooky von Dookie. That's just insane. Oh my goodness. Ay, ay, ay. All right. Wow. It's up at 12:14 right now. 12:14 in the afters. Unbelievable. Waiting for these earnings. Clorox, Simon Property Group, Chegg. Got about 1 minute to go until we get some earnings. Let's see if anything else is really moving in the after hours here. Not really. Pretty quiet in the after hours so far. We get Chegg up here. All right, here's Chegg running really into earnings, but look at it. This thing crashed. I mean, it was a $115 stock, now trading for $57. Ran today. A little bit of excitement coming back. Clorox, Simon Property Group, still waiting. Should have a first set of earnings in about 30 seconds here. Take a look at this. Voyager Digital finishes down about 5%. Lemonade, 0.67% in after hours again. Waiting for Chegg now. Chegg should be the first to move. And Clorox and Simon Property Group, we're on standby. And we are at 105. There it is. Chegg comes in with a revenue of 171.9. EPS beats 20 cents versus 19 expected. And net revenue came in on a miss, 171.9 versus 174 expected. That is a miss on the net revenue, but the bottom line beat. That was, bad guidance. Not good guidance. 762 to 764 million of guidance. Saw 805 to 815. Big miss on guidance. Big miss on the big miss on guidance, and then a miss on revenue. Stock now down 11.4%. That's like it. That was faster than instant karma right there. And I'm not suggesting that Chegg deserved any kind of instant karma, but that was faster than those car crash compilations you see on YouTube where it's like instant karma. That was so fast. Oh, accelerating 14, 13, 15% now. Bobbing in the after hours, unsure what to do here, but looks like you're getting more sell orders coming through from institutions. Some computer programmed sell orders here. 1477 now. To the downside, 16 to 17% down now on Chegg. And we are waiting Clorox. Awaiting Clorox and with no ETA on when Clorox is going to report. And then we do have the Simon Property Group coming out in 4 minutes. Now down 18%, 20% on Chegg. Oh, this one's just getting eradicated. Absolutely eradicated. See if this is a company that you could even buy the dip on. I don't know anything about it. Textbook rentals. This shouldn't even be textbooks, honestly. It should all be digital. Expecting 26% growth. They are profitable at about $1.48 of EPS. $1.79 expected next year. $2 expected the year after. That's not bad. 148. So what's it at now? It's selling for about 35 times this year's earnings. But how are you saying Shiba's running right now? It's at 71. It's been here like all day. Like this? I mean, this is just a moment in the life of crypto. Tesla, relatively flat in after hours at 1214. That's insane. It is insane. Doesn't make sense. It's a very, very quick, rapid catch up. But then again, the market does that. You know, and we've said it many times about Tesla. Yeah, we'll probably make a video on the Zillow flop. Let's see. Okay. All right, next earnings come out in 90 seconds. We are waiting for Clorox and the Simon Property Group. Simon Property Group comes out in 90 seconds. Simon Property Group was one of my trades during the pandemic. Man, we bought this thing at like 49, 52. That was crazy. Crazy times. How do they calculate guidance? Well, probably because the company has already gone through half the quarter. 1 month of the quarter. Jeez, Simon Property Group up 1/3% here. A little bit of excitement. Tesla just turned slightly red there in the after hours. Now down about 0.08%, 0.05%. All right. We should have Simon Property Group in 35 seconds. See what happens. All right. So Simon Property Group in 20 seconds now. Let's go ahead and pull it. Simon Property Group, and then we're going to talk Tesla. Okay, Simon Property Group. Waiting for it. 5 seconds, and then we should have it. And no, okay, we're at go time. It's 110. There it is. 3.13 a share. Q3. Wait, no, that's forward. Wait a second. This is very confusing. Beat estimate. Oh yeah, wow. 3.13 versus 2.53 expected. That's a good beat, actually. Increases full year guidance. Nice. See, 6.61 EPS to 6.71. Not a lot of details on this one, but a good beat there on Simon Property Group. Yet, despite a good beat, you're still down about 1% there in the after hours on Simon Property Group. Looks like expectations were a little bit higher. Okay, so let's now talk Tesla. All right. All right, folks. Now we're going to talk about Tesla. And to help me talk about Tesla, I'm going to bring in a legendary Tesla investor. His name is Gary Black. You should follow him on Twitter. He's amazing and incredibly insightful, and I'm super excited to bring him on. It's my first time talking to him on the channel and bringing him to you here, and super excited. So, Gary, welcome aboard. Thank you for being here. How are you doing?
Good. Thanks for inviting me.
Absolutely. Gary, this is insane. 1208. Is this sustainable? When is Tesla going to go down so we can buy more?
I think it's going higher. When you think about what's driving this move, it's a couple things. One, the 22 estimates keep going up, right? The analysts are behind. They're pushing estimates up. They're pushing price targets up. Two, you got a lot of portfolio managers who've been underweight Tesla all year, which has worked. And now as the stock has taken off, it's up 70% year to date, right? And the NASDAQ is up like, 23 or so. You got all these portfolio managers scrambling, and they don't like Amazon anymore. They don't like Apple. They don't like Facebook. They got to find something to buy, and Tesla has great fundamentals. Third, you got the EV credit that's still out there, right? So this is part of the infrastructure bill. It's going to be $8,000 for Tesla. Tesla's zero today, okay? So that's another thing. And then when you think about all the stuff next year, you got Cybertruck coming. You got this $25,000 compact car coming. When I look at Tesla, it's worth about $1,400. So I think it's still going higher.
Now, you run an actively managed ETF. Is there a limit to how much Tesla you could have in it?
We have one limit. We're what they call a non-diversified fund. So we can have positions that are more than 5%. We can't have any more than 25% in any one industry. This is the ticker FFND, Future Fund. We've gotten off to a great start. We're up, close to 8% in 2 months. Beating our benchmarks, beating most of the folks out there. But no, we can't own more than 25% in any one industry. That's our only limitation. So we're getting close to about 10%, which is kind of the limit that a lot of people think of. But as long as we still see really good upside, downside, and when we put a stock in, it's got to have at least 2 times upside to downside, we'll continue to own it. And it'd probably be our biggest position too.
Now, a lot of folks complain that Tesla's PE ratio is too high, that it's fundamentally overvalued. I make argument videos against these folks regularly and try to show, look at all these future revenue potentials that we have, the growth rates that we have. Do individuals in the market fundamentally misassociate PE with being over or undervalued and then get stuck investing in value traps, and then they wonder why they missed the boat on things like Tesla?
I think individuals get it better than the institutional guys, because I hear institutions saying that all the time. And look, if you go to business school, even if you take a basic finance course, you learn very early on, as you alluded to, you got to look at present value of future earnings or future cash flows, which is what we do. So we go out to 2025, you go out to 2030, but we can only forecast about 5 years. Yeah. We come up with about $40 in earnings for Tesla in 2025, and it's driven by EV adoption. EV adoption is soaring, okay? So this year it's about 6%, last year was 3%, next year it'll be 10%. So we go out to 2025, we get $40 in earnings. You got to figure out what kind of PE you think Tesla will deserve in 2025. It's going to slow. It's not going to be the same growth rate you have today. But
Sure.
we come up with about 50 times as the appropriate multiple looking forward from 2025. And you can calculate it mathematically. You put
2,000 bucks a share.
50 times 40 is $2,000, and then you discount it back. You got to come up with a discount rate that reflects Tesla's riskiness. Tesla has about a 1.6 beta, which is a measure of its riskiness. So I take the 10-year Treasury, which is about 2%. We think it'll be about 2%. The average year equities beat bonds by 6. Multiply that times 1.6, you get 11.6% discount. Very CAPM, financial theory BS, but it works. And so when you discount $2,000 back by 1.16 for about 3.5 years, which is where we are in 2025, you get about $1,400. So that's the way I think about it. I still see plenty of upside for Tesla. And where I'm going to be wrong is EV adoption will probably accelerate even quicker than what I'm thinking is. And Tesla, I'm assuming Tesla just holds on to its market share. It's in the EV space. So my bet is that we're going to continue to take our estimates up, which will push our price target up even higher. But when people talk about PEs, I just shake my head and say, you don't understand the way to value growth stocks. Nobody looks at growth stocks based on current PE. Why? Because the earnings this year for any growth stock, whether it be Chipotle or Airbnb or Trade Desk or even Amazon, it's going to be much higher in the future. You can't evaluate a growth stock based on PE. It just doesn't make any sense.
Brilliantly said. I don't know, by the way, if there's a setting on your mic, but if you could maybe dial your volume down just a little bit. It's peaking a little bit. No worries, though, if not. In the meantime, I just pulled up my sheet on Tesla. I have $20 for 2025. What? You're twice as bullish as I am, and I thought I was a Tesla bull. What's driving your $40?
Yeah. Well, I assume that EV adoption will be 60% by 2030. And then I back up. At 2025, I'm at about 30%. And again, in this year, it'll be 6, 2021. Next year, it'll be 10. I assume that Tesla's going to just hold on to its EV share. A lot of people argue with me about, focusing on EV share, focus on overall share. So I multiply EV adoption times EV share, and I get units. I take the units without getting into all the details, times the average price, and I'm assuming the average price goes down over time. Remember, they have Cybertruck next year. They'll have Tesla Compact in 2023. Multiply it times the operating margin, and I get earnings. Now, my $40 number, which is worth $2,000, includes nothing for solar, includes nothing for servicing, includes nothing for robotaxi, includes nothing for any kind of insurance. I'm just looking at the EV business, and the EV business to me is worth $40 a share in earnings.
Now, the latest stat that I have here is that Tesla accounted for 79% of new electric vehicles registered in the U.S. in 2020. Is that the number that you're using?
No, we're using a number that we look at it globally. I think you're looking at just U.S. So they operate globally. In fact, they make more Teslas in China than they do in the U.S. today. So
yeah, that's true. Yeah, this is U.S.
On a global basis, and there's a lot of data out there that you can track. We try to do it by region, but globally, Tesla's
15%.
What's that?
Globally, about what, 15? Between 15 and 20%?
No, it's about 21, 22 today.
Okay.
So when we go, again, we can get into as much math as you want, but when we look at it, we take the EV adoption times the EV share. We use 21%, by the way. And the EV adoption, you can multiply each year. You multiply it times the global SAR, and you get units. Units times pricing times operating margin gives you pre-tax profits, but a tax rate about 15, 20% on it, and that's how we get our net income number. Again, we don't really add anything for energy, solar energy. We don't really anything for the servicing because they don't make any money today.
That's interesting. Yeah, no, that's exactly what I do as well. Is I literally put 0 for energy, and it's like a loss leader, insurance, semis, robotaxi, all that. I use 40K. Oh, sorry. Go ahead.
That's conservative. Then you're being conservative.
Well, yeah, 100%. What I also use about 40K a vehicle in 2025. What do you find that reasonable? Thank you, sir.
I'm a little higher than that. I'm about 48ish.
48. Wow. Okay. If I change mine to 48,
what I do, I break it down by model. So right now, Model 3, Model Y, are probably 85, 90% of the business. You got to add Model S and X, which have been refreshed. There's a lot of demand right now for those. Cybertruck, I use about the same as Model Y, although I know once Cybertruck goes out, because they have over 1 million pre-orders, Cybertruck's price is going to get raised. And really,
Yeah.
the wild card, this is the hardest thing to model.
It is. It is.
What is the compact going to do? Tesla Q, some people call it Model 2. It's not going to be Model 2. I don't think it's going to be called Model Q. I think they're going to call it Tesla Compact. And then, so you got to forecast Tesla Compact, and then you got to figure out how much does it cannibalize Model 3, because Model 3 is going to be the thing to cannibalize. It's not going to be Model Y.
Yeah.
So you got a $40,000 Model 3 that's being cannibalized by, what'll probably start as a $25,000 Tesla Compact, and that's
Yeah.
the modeling question.
It's funny. I just realized that when I updated my 40K per vehicle to 48, I realized that even though my projected EPS for 2025 was half of yours, if I update to about 48K a vehicle and you're about 50 times earnings, probably I think you're still a little bit more bullish than me, but we're in pretty much the same place. So I agree with you.
How many units do you have in 2025?
So in 2025, I have 4.8.
You're close. I have 5.2. So it's
look at that. That's amazing. I love it. That's good.
What's so interesting? There's so many competitors, not competitors, but people on the sell side who do this for a living, right? And I manage money. You do what you do for a living. But the sell side focuses on Tesla, and they just consistently get it wrong. I'm always amazed at the beginning of every year, and we're kind of getting to the beginning of the year, I start so much higher than analysts on the current year, which is what happened this year. And then by the time we get to the end of the year, they catch up. So now I'm in 2022, because nobody's looking at 2021 anymore. I'm using $12 in earnings for next year. Okay? You know what the street is? $8.50. Okay? Oh. And this is it's a 35% difference. It's about the same difference that I was in 2021 at the beginning of the year. And then they catch up. And so now we're kind of at the end of the year. We're looking at $12 a share in earnings. Big number.
Wow. So now I want to ask you on margin. We just broke a threshold here. We just broke 30% on margin with credits. We expect that to be 30% without in the future. The whole credit debate, like, not even worth having, because I'm tired of seeing the trolls like, oh, only profitable because of credits. They're fine, right? I know you're on the same page with that. But what do you think? How high can this actually go? Have we peaked on margin, or where can an auto manufacturer actually go on gross margin?
Yeah. So first of all, you're right. Back out the ZEV credits, because they're going to go away. And I assume they'll go away not in 2022, but 2023. I assume they go away. So my price target assumes 0 ZEV credits, because as everybody starts making ZEVs, making EVs, they're not going to need to buy them anymore. So that makes perfect sense to me. 28.8 is the number for third quarter, excluding the regulatory credits. So I assume 28 for next year, because I'm trying to be conservative, and then I gradually move it up to about 30% by 2025. And that's my assumption. But again, I think I'm being pretty conservative right now, because I'm assuming a lower gross margin for next year than they had in the third quarter.
Yeah, you're right. Yeah, I think you are being conservative. But that's good, because that gives you that margin of safety, which is perfect for investing, and especially if you're managing someone's money.
You want to have it. And I'll tell you, the biggest investment controversy is as competition takes off the gloves, okay, and they really try to go after Tesla and risk cannibalizing their own, what we call ICE franchise, internal combustion engine franchise, and they take off the gloves and go at it, as heavy as they can, and deliberately cannibalize themselves. Are they going to gain share? That's the key investment controversy. And so far, it's like, where's the competition, right? They haven't really shown up. And everybody keeps saying, well, they're coming. And look, from an evidence standpoint, they are changing their strategy. You see F-150, which is the best-selling pickup truck in America for 40 years, now going to bring out an F-150 EV, okay? You see Porsche Macan. I'm a Porsche guy. I've driven Porsches my whole life. Now I'm a Tesla guy. I don't drive Porsches anymore. I drive Teslas. But Porsche Macan is the best-selling Porsche. They're going to bring out a Porsche Macan EV. What are you drinking? Is that a Monster?
Yeah, I'm a little tired today. No, I didn't sleep enough.
You have to drink this. This is like the best thing out there.
What is that?
Celsius? It's like, if you get on Amazon, after Monster and Red Bull, this is the energy drink people are buying. We own it in our portfolio. That's why I'm showing it to you.
What stock is this?
CELH, Celsius. Got a market cap of, I don't know, let's say 7 billion. It's not much. It's a mid cap name. I'll tell you what it is in a minute.
I'll check that out. Oh yeah, CELH. Okay, yeah. 7.5.
If you go into a convenience store, talk to the owners. You can't really talk to Amazon people, but this thing is a great product because it tastes good and it has no calories in it. It tastes.
Do you live in Florida?
What's that?
Do you live in Florida?
No, but it's in Florida. That's where their headquarters is.
Yeah. Well, that's why I was wondering, because sometimes you get there could be that local bias, right?
No. I live in Chicago. I mean, you don't find this out here, to be honest with you. But you know where you do find it? You find it in Sweden.
Ah.
I don't know why. I think they got started. But my point back to Tesla is the investment controversy is that as competitors take off the gloves, Tesla's going to finally lose share. I'm not buying it, okay? Because there's a brand taint associated with you stick a Mercedes or a Volkswagen, even a Porsche nameplate on the back of an EV, people are confused because they're used to those brands meaning gas guzzling and combustion engine. And I'm going to give you an example from the marketing world. Think of cigarettes, okay? Marlboro, Camel, Newport are the top 3 brands in regular cigarettes. You know where those brands are in e-cigarettes, which is the newest thing? Those things are on? They're nowhere. It's Juul. It's Focus. It's Mark 10. You don't see
Juul
those
and all
brands
that
on e-cigarettes because it doesn't make sense to a consumer. And see, this is there's a big thing on CNBC today. They're saying, why do active managers all underperform? Because they all do, okay? And I think a lot of it's because they never worked in a real operating job. I have. You probably have. They've only been financial analysts. They don't know what consumers think. They don't understand branding. They don't understand TAM. You can't just slap a Volkswagen nameplate or a Ford nameplate or a Chevy nameplate on an EV and expect it to buy. It's just not going to happen that easily. So even if you look at Porsche, which has been the most successful with Taycan, almost all the volume has come internally from Panamera. You can draw a chart.
Wow.
Taycan going like this, Panamera going like this. And so that's the problem here, that the consumer doesn't let you just slap an ICE brand on top of an EV and expect it to sell. The consumer wants a brand that means clean energy. That's why Tesla's doing so well. That's why Rivian will do well. That's why Lucid will do well. Okay? So,
that's incredible. I never thought about that before. But this transition you just mentioned between cigarette companies failing to get into e-cigarettes, you'd think that would be the easiest, most logical transition. Like if I were going to start an e-cigarette brand 10 years ago or 5 years ago, I'd be thinking to myself, what's to stop Marlboro from just rolling me?
Right. Marlboro e-cig, and there's no such thing. And what's even more incredible? I used to cover the tobacco industry, that's why I know probably more than I should know about it. Philip Morris, which owns Marlboro, owns Juul. Well, they own the rights to Juul. They chose not to use Marlboro on e-cigarettes.
Yeah.
If you look at all the top e-cigarette brands, they're all owned by the top tobacco companies.
Wow.
It's really hard to take a tainted brand and stick it on something that's supposed to mean like, clean char or whatever. It's like a disconnect. It's almost like an active ETF. It's very hard to take an ETF and have like an existing brand name on it because ETFs are all about transparency and saving on tax and things like that. So when you try to take it back to a topic at hand, when you try to take, you can tell I've had one too many of these today, right?
It's all right.
When you try to take a clean energy brand, and like Tesla, and you put it up against an ICE brand like Ford or GM, there's no way that they can compete with it. It just isn't.
Okay, so then I have a question for you because one of the things that I've liked about Lucid is that it is one of the first non-Tesla pure EV plays that's public and delivering vehicles now. Just delivered vehicles Saturday.
This one.
And I think that's led to a lot of enthusiasm for the stock. I can't, the valuation's a lot more difficult to come around because you can't run numbers on their factory efficiencies yet because you have no quarterly earnings yet showing how efficient they are. And I doubt they're going to be efficient. I mean, when NIO first produced vehicles, their margin was like 2%, then 4%. It took a while for them to even get into the teens. So how do you go about valuing something like Lucid? Or do you even care? Is this just going to be like a winner takes all?
Yeah, it is really hard. I mean, you point out, I can't come up with a volume number. I can look at production, but I don't know what the deliveries are going to be, especially since they're starting with the vehicles they started delivering a weekend for $170,000.
Yeah.
So how many of the $90,000 or $80,000 Lucids are going to actually sell? I'm not a buyer here of Lucid. It looks like it's about $37. I just think there's finger up in the air forecasting going on with Lucid at this point. And so I'm not a buyer of it. On the other hand, Rivian's going to come public next week. Rivian, they're going to put a value of about $60 billion on. Rivian has a much better potential for succeeding because they're competing in the truck business, which is the most profitable part of the business, about 20% market share. So if you think about TAM, they're going to be playing in 20% of the TAM, total addressable market. And then they're going to take their brand and leverage it, another concept if you've worked in a brand management organization, leverage it into a different category called SUVs, and you're going to have a Rivian SUV sometime next year. That's about 40% of the market. So their TAM is, this is an interesting lesson from Tesla. Their TAM will go from 20 to 60, whereas Lucid, once you start with a sedan, what are you going to do? You leverage it to an SUV? Doesn't really make a lot of sense. So the reason why I got excited about Tesla originally, I got into the stock not that long ago, 2019, because they decided they were going to double capacity because they opened up Shanghai, and they were going to leverage their brand into Model Y, which is the baby SUV. They had a big SUV, which is the Model X, but that crossover segment, CUV segment, is 40% of the market in the U.S. It's like 45% of the market in China and in Europe. So if you just do the math, you're basically going from, at the time, you were going from about 20% of the market with Tesla, and the big SUV was only a little tiny piece, but that CUV segment, the crossover vehicle segment, is 40%. You're basically going from 24, I think it was, to 65% of the market overnight. And so here's what's going on next year. They're going into Europe with this CUV, right? They're going to make the Model Y in Berlin. They're exporting it in from China, but it's overpriced because you've got to pay a 10% import tax from China into Europe. Once you make it in Berlin, you can sell that CUV, which is 40% of the market, against all the European competitors. That's huge. Okay. Back to Rivian, it's the same thing. You're leveraging your brand. You're building your TAM. So when a Rivian first comes out, people are just going to put the value of the truck in there, which is the pickup truck, right? But you really got to think about it. Is they're going to capture a certain percentage share of the SUV market as well. It's the CUV market.
Why do you think Lucid can't make this transition from sedan to SUV? I think that's the one place you lost me.
Good. I mean, think about it. Tesla was able to do it, right? But they had a Model X for a long time. I just think it's harder now. I think, when Tesla did it, they were the only EV out there. Right?
Yeah.
Now you got a ton of EVs out there, and you brought up the Chinese names before, Neo, XPEV, Li. They all have little sedans and little SUVs. So I just think it's very hard at this point for Lucid to go down the path of, let's introduce an SUV and compete with Tesla and Rivian. And the ICE guys have all woken up. So they're like, you're going to have a Volvo XC90 EV, I guess, next year. Okay. So there's a lot more competition today. That's all.
Yeah, but you've also got, Volvo, they're expected to deliver 500,000 electric vehicles by 2025. Rivian's expected to do 1/10 of that by 2025.
Wait a minute, Who's expecting? That's management. That's management forecast, right?
Sorry. So this is one. No, the only forecast I have for Rivian is an analyst forecast, and then average analyst forecast for Volvo. But
Volvo shows EVs for analysts.
That exactly expected to deliver 1 million vehicles by 2025, with half of them being fully electric, the rest being hybrids. Was an expectation.
Okay, that's possible. I mean, look, Volvo's got a great brand for safety. I always think in terms of what I call brand equities and who owns them. Okay, so performance, Ferrari owns performance, but Tesla also owns performance. Battery range is another reason to buy EVs. Tesla clearly owns the brand equity for range, even though Lucid's got a 520-mile range. Technology, FSD. Tesla clearly owns that. So I'm listing off all the characteristics that people use when they choose an SUV. If you go out and do focus groups with people and say, what's important to you? Okay, those are three things that are really important. I think as we get more and more into autonomous driving, and you're starting to see it really ramp up, safety becomes a huge element of the brand equity. And who owns safety in the brand equity space? It's Volvo. If you were to go to a bar tonight and ask 10 people, what's the safest vehicle out there, automobile vehicle out there? I bet you 7 out of 10 say Volvo.
Wow.
People don't say Tesla. Tesla needs to own safety. And I think Elon knows that. You hear him talking a lot about safety now. I think, that's a dimension that they will try to own. They have, if you look at their actual safety records in terms of deaths per mile driven, accidents, they have one of the safest cars out there, but people don't know about it. And here's the problem. Tesla doesn't advertise. They use social media, try to get their word out. Elon's a great marketing genius using social media. But once you've got all the other manufacturers advertising, they're going to have they're going to have to somehow advertise a little bit just to compete with them. But back to Volvo. Volvo owns the safety brand equity right now. If you take Volvo, you add EV to it, you add autonomy to it, Volvo could be a really interesting story here. I haven't studied enough to know whether I like the stock or not. It's came public, as you know, last week.
Now, why diversify at all in the car sector? I mean, if you've got a sector for cars, autos, why even bother with the other ones? Why not just all Tesla?
My clients ask me that all the time. In the FFND thing, I'll respond to people on DM, especially if they own our fund. They ask me all the time, and I've got one person who says to me, why don't you just announce that you're going to 30% Tesla in your portfolio? Because right now it's about 9%. I said, look, I didn't grow up that way. I believe in high conviction investing. Like if you really believe in something, you should own a lot of it. Here's the problem, and Ron Barron brought it up, one of the big shareholders. What if something happens to Elon tomorrow?
Yeah.
I mean,
yeah.
he's a very open guy. I'm sure he doesn't have tons of bodyguards around. I'm sure his health is probably good, but like me, he probably works a lot. And so the problem is, if something ever happened to him, the stock would go down by at least a third. And you can't say that about the other mid caps, multi caps, mega caps. Sorry.
Sure.
You maybe could say it with Facebook, with Mark Zuckerberg, but I don't think it's down by a third.
Yeah, no,
might
not as much as Elon. People don't like Zuck.
Right. You can't say that about Amazon. You can't say that about Google. You can't say that about Microsoft. You can't say that about Apple. Where something happened tomorrow, stock would probably
Bezos stepped back. We already have Bezos basically out.
So the Tesla, if Elon something ever happened to him, this would be a great short controversy, if you will. I would bet the stock would go down by a third, and that's the hard thing. Would you agree or no?
I mean, maybe like reactionary, right? Reactionary. Maybe shave 10 to 15% off longer term. Yeah, I could see that. Yeah, sure.
So that's why it's hard to go higher. But you're right. Is it a winner take all game? No. At some point, if you ever you're out in California, right?
Cali, yep.
Okay. If you go out in LA or San Fran, everybody's driving a Tesla. It's not like here in Chicago where you don't see that many, but where you are, there's so many Teslas out there. And at some point, it's not that it's not cool anymore. People want to be different, and so it's not a winner-take-all business. And so you're always going to have a number 2, number 3. That's actually the best question in my mind. Who's going to be number 2?
Exactly. That's where Lucid seemed like they had some promise, but you're actually thinking that Rivian has much more promise.
I think the problem with Lucid is it's these luxury sedans, and while you can leverage that into trucks and into SUVs. It's late because a lot more competition is in trucks and SUVs now. Okay, just think about it. You're gonna have Cybertruck in the truck business. Everybody's got a EV SUV now. I just think it's going to be harder to do that. I think where Rivian is standing, it'll be interesting where Rivian's market cap actually comes versus Lucid. It's supposed to be higher. Okay, it's supposed to be $60 billion, and I think it'll stay higher. But if you track these, and we'll come back a year from now and see where we are, I'll bet you Rivian will have great selling truck. Great selling SUV. They're in the right price segment, 60, 70 grand. It's high end, but it's luxury. They can always go down. They can always go down and have a basic version of that for 30 or 40 grand. Just like Tesla did going from Model S to Model 3. Lucid started up at $170,000. And once they have the Lucid Air, I guess it is, it's in the like
Yeah.
90 range.
From Dream to Air, I think,
Yeah.
going down. Yeah.
I don't see that as being a huge market. If you look at luxury sedans, it's only about 5 or 6% of the market. It's not a big number.
Interesting. Yeah, I mean that's a good point. Maybe they're trying to follow that sort of Tesla, like start with the luxury Model S, but like you say, now you've got that competition. Tesla didn't have that competition, so that's a very good point. Okay,
Just like
so
Lucid's at 60 billion today market cap. So it'll be very interesting to see a year from now who's got a bigger market cap.
that's a good point. What about you even mentioned them, Neo and XPeng Motors? Did you invest in these?
No,
Why?
there's too much competition. I mean, there's so much competition that the Chinese government is encouraging everybody to go EV. I mean, the thing that knocked my stocks off the last couple of weeks that I think was a big reason why Tesla started running, it's been running since the second quarter earnings, was the September EV numbers. I saw EV percentage, EV adoption in China for September was 17.5%. A year ago, it was 5%.
Yeah.
And everybody is playing in EV space, and they're dedicated players, right? You got NIO, you got XPEV, you got Li, you got BYD, you got 4 big players. Plus, you got all the German company, and you got Tesla, all bringing EVs out. It's just very, very competitive, and I worry that
The melting pot of cars is in China, is what you're saying.
Yeah, and the competition is intense. When you look at XPEV, they're bringing out $25,000 vehicles already, and they have, if you look at, I mean, they're not making money, but if you look at like the autonomy that they have level 4 autonomy already, and they're putting them on $30,000 cars. So it's a very competitive environment. It's hard for me to invest in something that competitive. In the U.S., other than Tesla, it's kabuki theater, right? They're all pretending, but there's nobody there that really can compete with Tesla yet, except maybe Lucid and except maybe Rivian. I'd say that the one who probably has the best chance of competing with Tesla is Volkswagen. That's just
Okay.
her piece seems to be very focused on it. And look, we have a great analogy. It's the cell phone business. When Apple brought out its smartphone, and you had everybody, including myself, using a BlackBerry. I had a BlackBerry, Motorola, or a Nokia. Okay, and Apple brought out its smartphone. It just put those guys literally out of business, right? Because it was so much a superior product, and you don't see any competitor matching Tesla in the near term in the U.S. Which is still, besides China, the biggest market.
Now, what about Tesla's obviously in the solar space to some limited degree. Do you invest in any of the like the Enphase, the Solar Edge, the Sunrun, any of the other energy competitors?
We have Enphase. We like Enphase. I know a lot of people have gotten Tesla solar roofs. They love them. I mean, they think they're great. I still think there's some logistical issues. They don't, they seem to wait a long time. There seems to be, not, I don't say installation issues, but installation delays and pricing issues. So they still don't make money on the business. They will. In fact, in my model for 2025, I have them making a little bit of money by 2025. But compared to the EV business, it's like a gnat. It's like it's minuscule.
Yeah.
So yeah, we like Enphase. We do play solar energy with Enphase. We think Enphase is the best operator, and it's about probably the 15th, maybe 20th largest position in our fund. So like
Absolutely. I'm big bull on Enphase as well. So that's awesome.
Especially in California. I mean, there's so many people that are investing in solar roofs because it's really important out in California. Where Chicago, it's just not that big a deal. It's too cold.
Gotcha. What do you see about Tesla in the event? And I see this question coming up here regularly. Folks wondering about a split. I think there's a lot of enthusiasm around stock splits, and that maybe it'll run again like it did the last time. Running up to the split, then it kind of sold off after the split. But what's your take on that? Nvidia just recently exploded after their split, but they've also been just killing it. So, any thoughts there?
It'll happen. We had a split last August, and the stock split 5-1. It was announced on. I just put a piece out on this on Twitter. If you want to look at it, a couple days ago, I think over the weekend. Stock was at 13.74 when they announced it on August 11th. It split 5 for 1. So do the math, that's 275. By August 31st, which was the split effective date, when it went 5 to 1, it was up 80% in those 20 days. And there's a reason for this. And everybody says, well, it's like taking a pizza pie and splitting it into 8 slices. Is it worth more? And the answer is yes. In New York, if you've ever lived in New York, and you try to sell by the slice, you can get a lot more for your pie than you can if you sell pies. That's just the way it works, because there's some people who just want a slice and they don't want to pay $20 for a pie, but they're willing to pay $4 for a big slice, and you get 8 of them. So the point is, there's definitely value added in the sense that there's management, when they do a stock split, and there's empirical studies that show this, have more confidence in their business. It's almost like self-selection. Those who do splits believe so much better, because no CEO wants to split their stock if they feel bad about their business, because then it drops from there, right? Just think about that. And so Tesla split their stock last year 5 to 1, and I had all these arguments with the bears that this is management being very confident. Go forward to this year, and I don't know if it's going to happen, because Elon's now the richest man in the world, and there's a lot of political noise about that.
Oh, yeah.
And I don't know if he wants to even call more attention to how much money he has. They're splitting the stock. Look, he's going to call attention to himself no matter what, because Tesla's going to continue to go up from here. And there's a lot of reasons for that. We can talk more about the gamma squeeze that's been happening. But I do think they're going to do another split. Last year they did it 1374. We're at 1200 today. And so the board, boards meet usually once a month today, either by person. Usually it's not anymore. Usually it's by phone or video conference. The next board meeting will probably be in November. Usually it's the second week of the month. And how do I know that? Because it's consistent with the earnings cadence. For earnings come out the third week of the month. So the board has to review the documents, materials. They get approved. The audit committee blesses them. Zach and Elon have to sign them as part of the 10Q process. But my guess is there's a board meeting in November, and they'll probably consider it. Whether or not it happens, I don't know. But if they don't do it in November, they probably have to wait until February. But I wouldn't be surprised to see another split, 4 for 1 or 5 to 1 in the next 6 months.
Wow. And then do you think that could lead to another push like you saw that last time?
I don't know. 80% was too much. I mean, that.
Yeah.
And I still believe the stock is worth at least 1,400. So to me, 1,200 does not give me nosebleeds. That said, the stock is up, 40% in a month after lagging all year, and then it suddenly just took off. And it took off. Literally, it started with the second quarter print, and then the third quarter deliveries came out October 1st. Then the China numbers came out October 9th, and then the earnings came out October 26th. It's been up every single week. And then you got, retail investors. And look, I'm not sure who's engineering this gamma squeeze, which we could talk about. It's quite incredible to watch every day. But I think the retail investors are buying it at the same time that you got institutional PMs falling out of love with Amazon and Apple and Facebook, saying, I got to own something, right? And Tesla looks pretty good, and it's moving a lot, so I got to own it. And I used to be underweighted, so now I've got to go to market weight it. And then you got the hedge funds. They're saying, hey, there's money here to own Tesla. We can create a gamma squeeze, make the market makers pay up because they got to be hedged. So, this is all feeding into itself, which it's almost like a perfect storm for the bulls.
Yeah, so tell me about that a little bit. Is it then possible that a lot of people, whether they're institutions or individuals, had these massively out of the money call options? It's Tesla's at 600, 700, and people are buying these $1,200, $1,500, $1,750 calls for 22, 23, whatever. And now all of a sudden they're coming in the money. So, the folks taking the other side are having to hedge. And that's what's actually squeezing this price up. How much of an impact do you actually think this gamma squeeze is having on the price action here? Is this just, like you say, institutions catching up? Is it a little bit of everything? Retail coming in, institutions coming in, the gamma squeeze. What percentage would you assign to the gamma squeeze?
Don't know, but unlike GameStop, where I can't come up with, maybe it's worth $40. I don't know what it's worth, but it's not worth 180. Okay, Tesla's got fundamental underpinning. It's got a value that's worth using real numbers, real forecasts, real math $1,400 in my mind. And any portfolio manager could do exactly what you and I do. It would take
Yeah.
an hour. Say, okay, here's SAR, here's EV adoption, here's EV share, here's ASB, here's the margin. Put a tax effect on it, come up with an earnings per share. It's not that hard. And so you can come up with, to your point, somewhere between 1,200, 1,400, maybe it's just looking at the EV business, not putting any value on robotaxi, which
Yeah.
the whole, like ARC has half their value is based on robotaxi, which I just don't see that. But if I'm coming up with $1,400, I got that as an underpinning. And an institutional portfolio manager at Fidelity or Capital or, any of these T. Rowe Price, they can come up with a number, and that's why they'll buy it and say, okay, I'm underweight it, it's worked, but now it's not working anymore, so I better go at least a market weight. So that's one factor. Second factor is I got all these catalysts happening. I got, the factories. I got 2 factories coming online with basically double capacity. If you try to buy a Tesla, you go online and try to buy it, you got to wait 6 months for the Model Y or the Model 3, literally. So you got that factor. You got the EV credit. S&P upgraded their debt to 1 notch below investment grade last week. It'll go to investment grade after fourth quarter. There's no way it's not going to be investment grade because they're covering their interest expense 18 to 20 times.
Yeah, what do we get, like BB plus or something like that, right? And we got to get to the triple.
It's 1 grade below, and if this was not Tesla, with the history of Tesla, where it almost went bankrupt in 2018, this thing would be investment grade. The metrics would be investment grade. The bonds trade as if it's investment grade.
Yeah.
You got that catalyst. So you got doubling the capacity. You got people leapfrogging over each other to raise estimates. You got the EV credit, which will probably get passed December 1st. And then in the $1.75 trillion House bill, it's in there for 8,000. There's all this fight about if you're unionized, you get additional.
Unions, yeah.
Don't worry about that because I don't think that's gonna survive. Although Elon did call Biden the union puppet today, which was pretty funny. And then I got the Cybertruck, and the Cybertruck isn't even out yet. The Cybertruck, I don't know how many pre-orders are. Some people say it's 1 million. Some people say it's 2 million. Well, it can't really make more than about 250,000 a year at Austin, and some of these orders are never going to materialize. But that's a huge number, right? If you're not really cannibalizing your other part. I've got a Cybertruck on order, but I'm not going to get rid of my Model Y. I use the truck for different purposes than I use my Model Y. Okay, so my punchline is you got this underpinning of valuation worth $1,400, and then you throw the retail investor who's got newfound power, okay, on Reddit or Wall Street Bets, and they're all talking about what stocks they want to own, and they're all betting on Tesla. And then I got the whole hedge fund world saying, hey, this is interesting. Institutional manager buy it, retail investor. I can really make some money here by just buying up lots of options. And the poor market managers, let's say poor, but they're Citadel, they're Susquehanna, they're Goldman Sachs. They have to be delta neutral, which just means that when you look at the delta, okay, so for an option, it's how much for a dollar movement in the stock, how much does the option move by? So when a retail investor or a hedge fund, because they don't know who it is, they want to buy an option, the market makers are selling the option to them, but they have to be delta neutral. So they have these options worth something. They have to buy an equivalent amount of stock to be delta neutral. And then what happens, so that's all taken care of, and then the stock starts going up. And it'll start going up tomorrow morning. You watch. At 4 o'clock in the morning. And the positions they put on yesterday, the delta will be higher. So they got to go back and say, okay, because now the delta's gone from 0.4 to 0.6 because 1,300 now is getting close to being struck, right? They got to hedge more on what they did yesterday. And that's the gamma squeeze. And so if you think about gamma, it's the first derivative of delta. So delta is the amount of change on the stock. For a dollar worth of stock, that's how much delta is. Okay, so 0.6 would mean stock raises by $1, the option goes up 60 cents. The gamma is the slope of the delta, the change in the delta, right? And you can look it up on TD or Schwab. You can see what the gamma is. Sure. But as the delta continues to go up, the gamma starts exploding. And anybody who's ever sold calls, and I have a couple clients I sell calls for, we stay out in the market, when we think there's a catalyst coming or earnings are coming or volumes are coming. We try to do it when there's nothing happening.
Right. Yeah. Buy when volatility is a little lower.
Right. But whenever you sell calls, you can watch the delta start creeping up. And when they get too close, and then the stock price gets too close to where I sold the calls off of, I could sell, 1,350, 1,400 calls now and get a good return for 1 week. Okay? You got to go in and you have to cover. And that's what the market makers are doing. The market makers are covering, and they have to go back in time and say, okay, all these positions we put on last week, we have to move them up. We have to cover them because the delta has moved up, and that's creating this gamma squeeze. How much is it worth? I don't know, but it's a big chunk of it. And I saw what happened with GameStop. I never tried to short GameStop or AMC because that gamma squeeze it'll bite you in the ass if you're trying to short.
Yeah, and what I found as well, what's so interesting about investing in general is, look, maybe the gamma squeeze is a third of all the activity, right? That would be a very big weight. That'd be a massive weight. But let's just make the example that the gamma squeeze only makes up 5% of the volume. Just the fact that it exists and people are talking about the gamma squeeze could be enough of that dangling carrot for the institutions and retailers to hold on and keep buying.
Right, exactly. And see, one of the things you can look at is the volume of Tesla normally is 20 million shares a day. Today it traded 55 million shares.
Yeah,
There's,
that's the point.
and everybody wants to blame the retail investor for chasing it. This has the power. The retail investors don't have this much power. Hedge funds have $3 trillion, and I'm telling you, I saw it with GameStop. GameStop, you saw the stock would go up 100% one day and then fall 60% the next day. I am certain that a lot of the source of this gamma squeeze is hedge funds just saying, hey, we could make some money here.
Oh yeah,
running it up in the morning, selling it out in the afternoon. You watch today, the stock ran up so much at the open, and then it fell, and then it zoomed up at the end. It's like every day, it's like watching a roller coaster. So
yeah.
I believe
Well,
the gamma squeeze is real.
On that note, though, at some point, Tesla's euphoria will wane. When the euphoria wanes again, this gamma squeeze will wane, and then the rationale behind it and the actual act of it will wane. Is it not then possible that you're going to get some of these traders rotating out of Tesla, and we could see some more affordable prices here for Tesla? I guess the big question is, how much will it run before then? Right?
It's hard to know. Like I said, I have a $1,400 price target, which I just went to last week. I was at 12. In 2 years, I've never lowered my price target. Okay. And look, the trick is when you get new information, you raise the price target. My new information from last week was EV adoption globally was way higher for third quarter than I thought it was. And that's what caused me, and I always try to lay out why I raised my price target. That's what caused me to raise the price target. So I think you're right. Every institutional portfolio manager is like me, right? They try to get into a stock when there's 2-to-1 upside downside. They call it risk reward. It should be called reward to risk, but two times upside for one downside. That's the usual rule of thumb. And then they start peeling it back, trimming it when it gets down about half the time, half times upside downside. Okay, so Tesla's at 1,200. Maybe you got 100 of upside, you got 200 of downside. That's one half. Okay, so you are going to see people at some point say this is too rich. But having done this now for a couple of years, and having been an investor for 30 years of my life, upside downside targets work. If you're disciplined about them, you can make money. ARC, everybody kind of kids that they don't have a discipline. Sure they do. Every time the Tesla gets way above 10%, she cuts it back. That's selling high, buying low, selling high. So she's very disciplined. ARC is.
Yeah. I admire it. I think it's great. I think you get some folks who are like, oh, she's selling Tesla. She must have lost enthusiasm. I think these are just people who misunderstand how funds work. It's not even worth really talking about.
And so institutions which own 70% of Tesla stock, will start trimming once it reaches their price target, or even gets closer to their price target.
Sure.
And look, as a growth investor, you try not to get it early. But, you have to start being disciplined and peel back. And look, I look at it as once the analysts have baked in all the catalysts into the stock price, so they've taken the estimates up. If they get close to my estimates in 2022, which again is $12, then it's time for me to start peeling back.
Yeah.
So, an example, last year, we can talk about what would make Tesla go down, because that's kind of the root of your question. We got off of Tesla in late January, early February, when it hit 880. We go up at 870. We exited the position. And we exited the position because it had gotten close to our price target. I think our price target at the time was about 960.
Yeah, you sold for 2 months.
We did. And we got out because, one, they wouldn't give any guidance. This is when they were basically going from, they guided every year, to, they said, we're going to grow at 50% long term. And I thought that was a red flag. The fourth quarter call was not good at all, and they bought Bitcoin. And look, we can talk about whether that was good or bad. That's not the point. But an institutional portfolio manager looks at it as, they want you to reinvest the cash in your core business. The core business is building new gigafactories. And they have huge ROIs when you build new gigafactories. 80% we calculate. Buying Bitcoin is something, I could do that myself, right? It's like buying art or buying gold. It's like, why do I want you to put your money in Bitcoin? Now, I got comfortable with it because the stock fell. We got off at 870, the stock got down to 620. We got back in because then my risk reward was back to like 2 times. But at 870, it was like a half. So anyway, long story short, institutional PMs want to make sure that the cash reinvestment, as they call it, the marginal return on investment, is going to be positive. It's going to exceed the cost of capital. The cost of capital, if you want to look at equity only, is about 11.6%. So that's why people, when they heard about that Bitcoin investment, like, what are you doing? We could do that ourselves. Just give the money back to us. What do you want this to be, like MicroStrategy, or the stock's totally dependent on Bitcoin?
The Michael Saylor approach, yeah.
Which is crazy. I mean, that's not what people are putting money into for. People want to build, 10 gigafactories over the next 10 years. They don't want to put it in Bitcoin. They could do that themselves. So anyway, that's one of the things that, as long as Bitcoin stays small, it's $1.3 billion. Think of it as $1.3 billion of their $1 trillion valuation. It's minuscule. But if that Bitcoin investment went to zero tomorrow, it's $1 off the stock price, right?
Yeah, that's a good point. It's not a big deal. Yeah, MicroStrategy, I think they hold somewhere around $7.5 billion in Bitcoin, and their market cap is about 7.5. So the market has basically said the company is worthless. You're just investing in the Bitcoin.
And it's interesting to me, since Michael Saylor, I listened to him, he's on CNBC today.
Yeah.
Anytime he says corporate America, and I used to be in corporate America, is going to buy Bitcoin, I just shake my head and say they're never going to go into Bitcoin, because it's drilled into you as a CFO and as a corporate treasurer. You invest in the business, and what's left, you give it back to the shareholder. If you've got excess money after all the things you need to grow your business, so all the gigafactories, which is where they should put the money, you pay down debt, you buy back stock, or you pay out dividends. Now, I don't think Tesla should pay out dividends because that really restricts you. It's very rigid. But if they wanted to buy back stock whenever it got hit, I think that would be a good use of cash. I would rather than pay down debt for now. They have about $8 billion worth of debt, which is minuscule. They could get rid of all their debt, get to the investment grade rating, and I think that's good because there's a lot of mutual funds that can't own stocks with a junk bond rating. So that's what I would do. I would basically pay down debt with the cash that they don't need for gigafactories, and then they could buy back stock opportunistically if it gets hammered because the China first month of the quarter numbers are always bad because bad meaning this is what the media says they're bad because they export out a lot. So the domestic number, which is residual, always looks weak, and they get media saying, "Oh, China demand is falling," which is what they said back in July. It's what they say every month. First month of every quarter. And they'll probably say it in November because my bet is you're going to see a big drop for October, which will be reported November 9th. That's the first month of the fourth quarter. You'll see a big drop from September where the number was a record. But hopefully investors have learned the way this works, that the first month of the quarter they export out, the second month of the quarter they export out about a half, the third month's all domestic. But that first month, you satisfy the exports first. So that's something that can happen that could make the stock go down. What would be a bad investment of the cash? Building restaurants would be a bad use of the cash. Okay, let Starbucks or McDonald's pay for the right to sell food at your charging stations. Don't go build your own restaurants. You don't know how to build restaurants. I know that Elon's brother builds restaurants, but that's just not your core competence. It's not why I own Tesla. It's not why any institutional manager owns Tesla.
Yeah, and restaurants are a notoriously dangerous business in general. So you mentioned crypto. You brought it up. Do you own crypto? And what do you think about it?
Look, I don't own it because I can't value it.
Yeah.
I can't using any kind of, discounted cash flow, discounted earnings, comparables. I can't using any of the traditional valuation methods I used for 30 years.
But Jerry, you don't need any of that stuff. You just know somebody's going to pay you more tomorrow.
Yeah. Greater fool theory. When the music stops, you got to be in the seat.
Yeah.
I have friends of mine. I have people in my family who own crypto, and I said, look, you do what you want. I'm not going to own it, but I don't need to. I can look at the Russell 3000 all day long, come up with great names that I think can double over the next 5 years. I don't need to
Okay,
take.
give me some of those.
I just gave you one. Celsius is a great name. Spotify is a great name. Airbnb is another great name. I think Snap's gotten crushed because people think
Yeah.
they can't figure out the algorithm, for the new iPhone
The Apple
14,
thing, yeah.
Yeah, they'll figure it out. TTD is another one. The Trade Desk.
Trade Desk.
They can figure out ways around the iPhone code where they can group things together, group um, people together. They don't have to know the specific um, people. They can just look at it as population. They have algorithms that can get around it and convince advertisers. It's not about that the advertising doesn't work on a Snap or even Twitter's a good example. It's just they don't have the tools to measure the ROI, which they need to develop. So that's this whole thing about first-party tools versus third-party tools.
Yeah, but I mean, like, ROI measurement in ads is the easiest way to sell more ads. If you can,
it's conventional. I mean, when I used to work, I used to be a brand manager at J&J. We would do it using surveys. I mean, you can measure ROI, but you can't use it, using your phone anymore.
I see. Okay.
But they'll figure out ways to do it. So we like that. We like Etsy.
Hey, that's one of mine too. Nice. What about Pinterest?
Pinterest I struggle with. I just don't know if it has lasting power.
Yeah, I agree.
Like a Snap or Twitter has. We don't own Twitter anymore. We used to. Twitter's different because it's mostly brands. Okay, so Nike will advertise on it. United Airlines will advertise on it. They don't need to be able to capture everybody's individual data. It's just big branding. Right. So Twitter's probably fine. Snap is the one we own. We think it'll be fine long term.
Okay. Wow, that was interesting. Okay, so now I want to ask you macro. Elon Musk responded to Jack Dorsey and Cathie Wood, and all of them kind of arguing on their own pedestals about inflation. Jack Dorsey says hyperinflation is coming. Elon Musk says he sees costs pressure going up. Cathie Wood saying the velocity of money is down, so money's circulating less, therefore pulling inflation down. And we also know that every manufacturer is double, triple ordering right now. As soon as this double, triple ordering stops, we clear up these supply backlogs, we could be in a deflationary environment. I want to know where your head is on this.
I view inflation as being transitory. You look back at every time we've had one of these epidemics, and I don't look just at the U.S. What you see is the government really creates a lot more money. So the Fed, the Fed will put out lots of very easy monetary policy. You see, there's a lot of fiscal stimulus because you're trying to offset the fact that the economy goes down while the epidemic was raging. And you can go back 70 years and you can see this happens every time. Usually what happens afterward is you get a lot of fiscal stimulus. You get a lot of fiscal stimulus and you get easy money for a year or so. And you get this temporary inflation. And temporary inflation is because you get a lot of shortages. Today you can't get enough help. You talk to restaurant owners, they're trying to hire people at $20 an hour and they can't do it. They operate with limited hours. And that causes transitory inflation. But if you were to go talk to an Uber driver today, okay, now all of a sudden there's a ton of Uber drivers out there and the Uber fees are coming down, okay? You're going to see that with all kinds of commodities as more and more people go back to work because their safety net has been exhausted, their benefits have been exhausted. To your point, as prices go up, you always get more supply because it's more profitable for folks to make stuff. You're going to see the supply shortages ease over time. I don't know if it's going to be 6 months, 9 months, whatever, but they will ease. They will be transitory. You'll have inflation come down. So I'm not buying the argument that this what Powell did call transitory inflation has now somehow turned into secular inflation. Not buying.
Right.
Well, I think,
it seems like the tilting point has just been delayed a little bit, sort of peak inflation.
And now you got this risk that you got governments, particularly in Europe, because Europeans sometimes they worry more about inflation than we do, okay, because of the hyperinflation they had after World War II. You have the risk that people start really being restrictive in their fiscal policy or their monetary policy. And to your point, that pushes us into a deflationary type cycle because you got too many goods and there's no more shortages. There's just too much supply. Now, I believe that you've got Yellen, who's a dove. You know, she's a dove from when she was running the Fed. Powell's a dove. And you still probably have the majority of Fed members who are dovish. Okay? So I don't think Powell will make the same mistake. I think Powell's going to remain dovish. They will start tapering, which remember, tapering is just taking away the punch bowl. Okay? So if the punch bowl is being replenished at $120 billion a month, okay?
Yeah.
Now you say, we're not going to put $120 billion out this month, which means they're buying bonds, okay? So they're pushing long-term interest rates down. We're going to do 105 next month. And then we're going to do 90 the following month. And then we're going to do 75 the following month. And over time, the punch bowl stops being replenished because everything's fine again. Okay? That's what I think is going to happen. And look, if we start seeing bad data, like let's suppose GDP, which right now it's say 4-ish, goes to 2 or 1, then I think they say, okay, you know what? Let's stop the taper and let's keep the punch bowl where it is, wherever it is, $60 billion a month. And so we're not raising interest rates. Nobody's talking about raising interest rates till late 2022. Right. But I do worry that you get so many people who are screaming inflation, 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 because they're looking at where it is today. And there's no perspective of history here that every time you have one of these epidemics, you have massive fiscal policy benefits because they close the economy for a while, and you have massive monetary policy, and that stops, okay? And once it stops, you're going to have more deflationary forces by definition. So I'm much more in the camp of deflation is still as much a risk as inflation. And then look, there's 4 things, this is the secular stuff, that are driving deflation, okay? One is you got global outsourcing. One is you got price transparency. One is you got automation. And the 4th is demographics. People getting older, they're leaving the workforce.
What was your 3rd one? Global price transparency. The last 2.
Automation, substitution of machines for labor.
Right.
Price transparency, you can see what every price is, so it makes everything real competitive. Global sourcing, meaning you can get the cheapest goods possible, whether you're Nike or Lulu or anybody. And then demographics. People get older, they leave the workforce, and they don't spend as much. They don't have as much income. That's deflationary. You see, that's what really happened in Japan. That's why Japan's inflation went to 0. And you're seeing that all over the world. Yeah. So I've got those forces that are secular, and then I have this temporary inflationary stuff, which is because of COVID, and now this massive stimulus. But, I look at that as being temporary, and this will all take care of itself once people start producing goods again, and once people run out of benefits, they have to go back to work. Well, I don't want to stay home and day trade. Not everybody can stay home and day trade.
I see. Yeah. So, I mean, I agree with you as well when you say inflation might be so evident now because and such a fear for folks because it is so evident now. We're seeing it happening right now. It's kind of like pain is always the most painful while you're in pain, but your memory of it or your expectation of it is never as bad. So I agree with you. And I don't think you'd probably be the right person to ask if you think crypto is going to crash when we start heading towards deflation.
I've been thinking crypto is going to crash. Well, it almost crashed back in July. It went to 29. Yeah. But I can't figure out a way how to value it. And I've gone on Twitter, and I've got a lot of followers. They tell me how you value it. And people do what you do. They say, well, it's going up. You just sell it to somebody else. Let's not tell me how to value it. Ray Dalio,
that's all we got, man.
That's all I got. Ray Dalio said here it's like a network effect. So you have to calculate the value of the network. And you can put a value based on how many people are in the network. And that sounds plausible. So I'm not predicting it's going to crash. I've come to grips with Tesla's going to hold some. As long as it doesn't grow, I'm fine with it. Again, if Tesla's Bitcoin investment went to 0, you'd have to knock $1 off the share price, not off earnings. It's worth $1 out of $1,200. It's
It's the same thing, like you said. If you include energy or insurance, it's like a few dollars of the share price. Like nobody cares.
Or even like robotaxi. Robotaxi is probably the most divisive topic
Yes.
because, Tesla has an advantage. They've got 2 million cars running around collecting data, that can feed into the dojo. The dojo can like look at all these different scenarios and say, in this situation, this is what you should do based on, what cars are coming and where you are in the world. And you could have like a, this AI driven, machine driven network that basically can drive all these cars all over the place. Fine, I get that. The problem is that, a lot of the equipment was designed back, for 2016, 2017 type hardware. And a lot of especially the Chinese autonomous vehicles, they're spending a lot more per vehicle on hardware than Tesla is. So they might have, where Tesla might have, 8 cameras, okay, or, but no LiDAR, no radar anymore. The Chinese EV makers might have 12, 3 LiDARs and 1 radar. And so they don't have the Dojo network. They don't have like the AI that Tesla has, but they're doing okay. And I use your state of California as a good example. There are 8 players now been approved for autonomous vehicle testing. Tesla, I would think, would like to be approved for testing, but they're not. And to be approved for testing, if you read the fine print, it says you've got to be level 3 or level 4. And they're not yet, okay, because there's still too many interventions. So I'm not saying that it's a bad EV stock. What I'm predicting is you'll see, just like when you used to buy a car, you could have a base stereo, you could have premium stereo. And I'm not saying Tesla's base, but you could have 2 levels of autonomy. One that's more of a commercial grade autonomy and one that's more consumer grade autonomy. So I think for robotaxi, which is commercial, you're going to have cars that might be, much more expensive. That people buy, they're equipped with all kinds of stuff in it to make sure that they can drive autonomously, including LiDAR, radar, more cameras, whatever. And I think unless Tesla wants to do that, it's going to be hard for them to compete. So.
Interesting. Oh, that's very interesting. So what you're saying is we might see this. You might, for example, buy the Model X full self-driving, but in the future, you might have to add on the commercial package to make you legal for California standards to sign up for Uber or whatever, right?
Maybe. And look, when I used to drive Porsches, it was a Bose stereo, which is pretty good. Porsche charges for everything, like $2,000 extra. You'd have the base stereo, you pay 2 for Bose, you could get a Burmeister for 7. And the Burmeister was like, you get in the car, you could sit there all day and listen to it. I'm just saying autonomy is one of those things that you could add all kinds of hardware to make it better. And I'm not an engineer, and everybody always goes, well, you're not an engineer, you don't know anything. Yeah, that's true, but I look at what a lot of the competitors are doing. A lot of the competitors are putting a lot more money into their hardware than Tesla is right now. And so all I'm saying is it's not a fait accompli that Tesla gets to the finish line first, because once they get their FSD to work perfectly, because they're bringing all this information in, all they do is flip a switch, and voila, they have instant distribution. Okay, whereas nobody else has that. Yeah. So I'm saying Tesla will probably get there by 2025, but I think a lot of people are going to get there by 2025.
Yeah, I mean, really, I mean, personally, I think all Tesla really needs to do is throw on forward-facing LiDAR, my opinion.
Don't
because
say
the
that.
big thing...
You're going to have hate mail. When I said that, you're going to have hate mail when you say that.
Okay.
Trust me on this. Because Elon hates LiDAR. He just thinks it's an investment. That's what he says.
It's true. I guess maybe I don't know. I mean, maybe I will. I've mentioned that a few times on this channel, so maybe I'm a little bit more callous to saying that. But you look at a company like Microvision. Tesla could buy them. I mean, it's a fraction of. What's Microvision now? I mean, it can't be that expensive. But anyway, you buy Microvision. You have forward-facing LiDAR. It's just not that hard. Throw it into the rearview mirror console. It's a $1.3 billion company. It's nothing.
And they may do that. And I wouldn't be surprised, because I think what people don't appreciate, especially in China, they're putting a lot of money into their autonomy, and a lot of them are level 4 already, even the cheaper ones. And I think at the that's going to force Tesla to have to spend more on their autonomy hardware.
I see. I agree with you on that. See, like even Nvidia. See, Nvidia has written on their blogs. I have this written down here. Nvidia has long recognized that LiDAR is a crucial component to an autonomous vehicle's perception. It's kind of interesting because I really like Nvidia and I believe and trust them. So I do think this is a little bit of a blind spot by Elon. But again, I'm also not an engineer.
Well, and when they made the decision not to use LiDAR was very expensive at the time.
Yeah.
Now you can buy a LiDAR.
And the spinning wheels and it's ugly.
Now they don't have that anymore. They're like little, I don't know, they're the size of an iPhone, okay? But they're like $500 per LiDAR unit. It's not like $10,000 anymore. They really
Yeah.
So, look, I don't know the answer. I just think to put, let's suppose you have a $3,000 price target on Tesla without naming names, of which 1,500 comes from EVs and 1,500 comes from robotaxi, where you're saying, if you take every one of these supply-driven model, every one of these robotaxis, number of hours per day, number of cents per mile, number of miles per hour, number of cents per mile. Here's the math. That's a supply-driven model as opposed to demand model is what's going to be demand for, autonomy and working into that. And look, if I'm Uber or I'm Lyft, I'm not just going to give up. I'm not just going to let Tesla come in and take my business. And it wouldn't surprise me to see more like subscription models like you have with cable, where you pay some monthly rate and you can use it all the time because you're not a driver.
Talking about giving up, why do you think Lyft and Uber shut down their sold off their self-driving segment?
But they're using other players. They're investing in third-party autonomy units, and that's what I think. I don't think they thought they could do it themselves. I think they were better off hitching their wagon to other autonomous.
Or do you think they're going to go for like the Hertz model, where Hertz is renting these things, maybe full self-driving, individual customers rent them from Hertz, and then Tesla has the full self-driving through that. So it's kind of like Uber's using Tesla.
See, you can't rent a Tesla today through Hertz that will drive you by itself. It's a level 2 autonomous vehicle.
Right.
And you have to be, and look, you can watch all the YouTube videos. There's a lot of interventions. They're not where they're fully.
Have you been in it yet, the full self-driving?
Sure. It's hard. It's hard for me to imagine because I'm looking at it today because every time I've been in, I have an FSD car and it's like, somebody said, well, what's it like? I said, well, kind of like watching, I hate to say this, but it felt to me like a drunk driver, who's 17 years old.
Yes.
The first time I drove it, because I got turned on a couple weeks ago when I got it, and it makes mistakes, right?
Yes.
It doesn't do well with what they call unprotected lefts. When you're approaching an intersection, on a light, you have to go across 2 lanes traffic. It doesn't do that well. It doesn't. It's not something that you could just kind of let it drive itself from point A to point B. Now, I don't know if there's anything that's like that, but all I'm saying is, you're a couple of years away from a level 4, level 5 Tesla vehicle being put in a Hertz, and they just push a button or they say into the air, take me from here to there. I just don't think we're there yet. And so therefore, and I can't figure out the pricing. If you have a subscription model, it's not going to be $1 per mile, as some people are assuming. It may not even be 25 cents a mile. And you have a lot of players trying to do this. And so all I'm saying is it's going to be competitive. I'm not saying Tesla's not going to get there because they have the best engineers in the world working on this. I'm just saying it's not a fait accompli that they're going to be the first to market with a product.
Okay. So 2 competitors I want to ask you about, and then I'm gonna we'll wrap it up so I don't keep you all day. Apple Car, and then I'll save the other name because you'll probably just laugh it off. But we're gonna start with Apple Car. Is this a risk? Do you even have a chance? Why haven't we seen this thing? Is this a joke? Are they just gonna end up partnering with somebody like Lucid, so that way Lucid's got the car, Apple's got the software, right? Like, what is this?
Yeah. I don't see Apple doing much. It's kind of like I don't see Tesla making an iPhone.
Good point.
Not really their core competency. I don't think Apple will ever have a car that can rival Tesla. They'll try, right? But I think the short answer is they'll partner up with somebody. They got more capital than anybody. They can use their stock, which is worth $2.8 trillion or something, and buy somebody for 50
Yeah.
or $60 billion. And that's the way they'll get into autonomy. I don't see them doing it themselves. That's not their core competency. That's not what they do. So I wouldn't say it's a joke, but I'd say they'll try, but I think they'll fall short and they'll wind up buying somebody.
Wow. Okay. Do you invest in Apple?
I don't own Apple. I wouldn't, to be honest with you. Let's see something real quick on my screen. That's 2.5 trillion. Look, Apple's expensive the way I look at valuation. It's
Wow.
growing, but I look at PE relative to growth. So I'm always about, if you think about a discounted cash flow, there's only really 4 variables. There's earnings, there's the growth rate, there's the risk-free rate, and there's the beta. Okay, that's it. And
Well, you use the beta. That's for you to pick your discount rate. Other people pick it out of the air.
Okay, but I can look at it on Bloomberg and see there's 1.6.
Yes.
Apple, I'm looking at Bloomberg right now. Apple's growing their revenues at 8-9%. Okay, good. And it's trading right now at a 26 PE. So the way I look at the world, it's 26 divided by 8 or 9. It's trading at about 3 times PEG, which, by the way, that's what the S&P trades at, 2.8, 2.9. Russell 1000 growth, which is the universe in which Tesla competes, 22 PEG is about 2.1, 2.2. Okay, you know where Tesla's trading at? 1.8, 1.9, probably 1.9 today. I haven't calculated, but it's probably 1.8, 1.9. Because they got 55% growth, and they're trading at 100 times my estimate for 2022. That, just off the top of my head, is about 1.9. So Tesla still looks cheap to me.
Interesting.
Apple, I can't own it when it's got a 2.9 PEG. I'd much rather own Google, which we own. Google's got about a 1. Google's about the same as Tesla today. It's got nice growth rate. Let's call it 16% revenue, 18 earnings. And as of today, Google's at.
Yeah. I think Apple's just been killing right now because of its growth here during the pandemic. But you're right, its growth rate, I mean, they're expecting 3.7% in 22, 5.5, 23, 6.1, 24.
It's not a growth stock. Google's trading at 26 times and it's growing at 16%. That's pretty good.
Yeah.
The cheapest stock I look at in the mega cap space, mega cap defined as over 200 billion market cap, is Facebook. But Facebook has hair. The whole metaverse, changing the brand, and I actually think that's a smart idea. The Google approach. But I can't get excited about Facebook because people aren't using Facebook like they used to. They use WhatsApp, they use Instagram, but Facebook is, for lack of a better word, dying. The Facebook product is dying.
Yeah, well, I kind of agree with you. I don't like Facebook either. I do, however, and this is not the other stock I wanted to ask you about, I do like Matterport. Now, don't let me saying that influence your thoughts on that. Have you into Matterport at all?
No, I haven't.
No. Just 3D scanning real estate, like physical spaces, right? I see that as a potential bridge to almost metaverse, mostly because I'm from the real estate space. I'm a little bit biased towards these 3D scans, but
no, I haven't looked at it.
My vision of the metaverse is super brief. Somebody could scan up there. You could scan up whatever property you live in and invite over 10 different contractors into your meta home. Get your estimates that way. Forget having to invite them over in person,
No, that's the way. That's the future. That's definitely
yeah, exactly. Okay, so the last thing, I have a feeling you're probably just gonna laugh this one off, but I'm gonna give the best bull case I could think for him. Nikola, okay, Nikola. I know.
Wow.
I told you, but I gotta say, you gotta give him credit for this idea that putting hydrogen in a battery and having a battery electric vehicle, having this together, would create demand for hydrogen fuel stations, which means maybe we'd actually finally get a hydrogen transition, which I just don't see happening otherwise. You got like Plug Power has their hydrogen commercial vehicle partnership with Renault out in France, but nobody's got hydrogen stations. So it just seemed like that Nikola idea, that initial Badger idea of hydrogen battery, the idea was good. They were a complete fraud of a company. But what do you think about that idea? And then maybe separately, the company, do they have a chance?
Do you have kids?
Uh-huh.
Okay. Would you let your wife and your kids drive in a Nikola Badger that's fueled by hydrogen?
I mean, I guess I haven't thought about that. So you're anti the explosive, the Hindenburg effect, huh?
And Elon has said this. It's an unstable gas, and it's not the most easy to use power in the world. And I just think there's a reason why you don't have hydrogen fueled vehicles, driving around the road. Think about if one gets hit. Just think about if one gets into an accident. I just
Good
think
point.
it's unsafe, but I don't see it being commercially viable. Nickel's going to go away at some point. Either it's going to sell itself to somebody, and I don't know if you've ever talked to people there. I mean, I have, and that's really kabuki theater at Nikola. I'm sorry. And this is before Trevor Milton. It was kabuki theater, and you could talk to other people there. I think they're just making it up as they go along. Look, they'll have prototypes. Right now they have, I think, one client they're supposed to be delivering vehicles to by the end of the year, Anheuser-Busch. And if they don't get their vehicles to them, that's their last client. And I just don't see them ever producing at scale vehicles in either Arizona or in, I guess, the plant over in Europe. And so I put their value at what they have in cash. It's about $2 to $3 per share. And at some point they'll realize it and they'll just sell it because they're going to run out of time and people are going to say,
ouch.
Yeah, all right.
So your discounted cash flow is, where's the balance sheet? Here it is.
This is what it's worth. $3. It's cash.
That's great. Gary Black, thank you. How do people follow you?
At Gary Black 00 on Twitter. That's the simplest way. Or you can go to FFND, which is the ticker of our active ETF. We just crossed $100 million today, actually, in assets. Not FFND, but our firm. And our premier product is FFND. But you can find us on Twitter. Or just go to the website, the Future Fund.
Future Fund. Awesome. Thank you so much for being here. This has been amazing. If you don't mind, stand by for a moment. For everybody watching, thank you so much for being here. We will see you in the next one. Appreciate it. And until next time.
Thanks, Kevin.